Imagine stepping into a grocery store with a time machine. You walk in from 2019. You grab eggs, milk, bread, a few snacks, nothing crazy. Then you look at the receipt, and suddenly it feels like inflation personally took your wallet. A lot of people have the same question. If unemployment is low and the economy is supposedly doing fine, why does everything feel so expensive? Why does it feel harder to get ahead? Why do so many people feel poorer than they did a few years ago? The answer is more complicated than most headlines suggest. Because what's happening today isn't just about inflation, it's about the aftermath of inflation. And history suggests that may be the bigger problem. To understand why everything feels expensive today, we need to travel back to the 1970s, an era remembered for disco, bell-bottoms, and one economic disaster: inflation. Back then, prices started rising rapidly. Oil prices surged, food prices climbed, energy costs exploded, and suddenly, everyday Americans found themselves asking the same question people ask today: why is everything getting so expensive? At its peak, U.S. inflation reached over 14%. That's not a typo. 14%. Imagine your grocery bill rising by double digits every year. Imagine your rent doing the same, your gas bill, your insurance, everything. The Federal Reserve eventually fought back. Interest rates were pushed above 19%. The economy suffered. A recession followed. But inflation finally came down. Problem solved. At least that's what most people remember. But here's what history often leaves out. Prices stopped rising as quickly. They didn't go back down. And that's a very important distinction. Because inflation is like gaining weight. If you gain 30 pounds and then stop gaining weight, you don't magically lose the 30 pounds. You're just no longer gaining more. The same thing happens with prices. And that's where today's story begins.
Most people think inflation means prices are going up. That's true. But the real villain is something economists rarely talk about: price levels. Let's use a simple example. Suppose a carton of eggs costs $2. Then inflation pushes the price to $4. Now inflation falls back to normal. What happens? The eggs don't suddenly go back to $2. They stay around $4. Maybe a little higher, maybe a little lower. But the damage is already done. The higher price becomes the new baseline. And this happened almost everywhere after 2020. According to the Consumer Price Index, overall prices rose more than 20% between 2020 and 2024. Some categories rose much more: auto insurance, rent, restaurant meals, home maintenance, utilities. Many households saw costs rise faster than their paychecks. Now, wages did increase, but here's where things get tricky. Humans don't compare themselves to last year. They compare themselves to what life used to cost. And that's why so many people feel squeezed, even when the official data says the economy is growing, because their memory is comparing today's prices to 2019. And 2019 feels like another planet.
This is where the story gets interesting, because inflation has fallen dramatically from its peak. The Federal Reserve raised interest rates from near zero to over 5%, one of the fastest tightening cycles in modern history. Inflation cooled, but consumers kept spending. The economy kept growing, and unemployment remained relatively low. So why are people still frustrated? Because inflation and affordability are not the same thing. Inflation measures how fast prices are changing. Affordability measures whether people can comfortably pay those prices. And affordability remains a challenge. Housing costs remain elevated. Mortgage rates remain high. Insurance premiums continue climbing. Healthcare costs continue rising. Many families feel like they're running faster just to stay in the same place.
This creates a strange economic environment. The economy looks healthy on paper, but many individuals don't feel healthy financially. And both things can be true at the same time. That's what makes this period so confusing. The statistics say one thing, people's bank accounts say another.
Now, could inflation continue falling? Absolutely. Could wages eventually catch up? Of course. Could affordability improve over time? Without question. But if you're waiting for prices to magically return to 2019 levels, history suggests you're probably waiting for the wrong thing. Because inflation usually doesn't work in reverse. The challenge isn't getting back to old prices. The challenge is growing into the new ones. That's uncomfortable. It's frustrating, and it takes time. The future is uncertain. Always has been, always will be. The goal isn't predicting every inflation report. The goal is understanding the forces shaping your financial life. Because in economics, the biggest risks aren't always the things making headlines. Sometimes they're the things that slowly become normal. And right now, that may be the most important story of all. History doesn't repeat, it rhymes. If you enjoy simple explanations of the biggest economic story shaping your future, subscribe to Market Rhymes.